You made it to part 8. Congratulations. This is the exit strategy. So my name's Andy. My channel's Finding Value. I'm just wrapping up this part 8 of a new investor series. And this is the exit strategy. This is what you need to do when you exit. So let's look at the presentation on exit strategy. So we've got commodities topping. Ratios will get expensive. I'm going to show you what that looks like. Gold to whatever commodity ratio is getting expensive to gold. Commodity to S&P 500 ratio is getting expensive. The housing market's going to start losing steam in terms of new housing starts, and prices are going to start losing steam. So we're seeing all of this kind of come to fruition. So I'm going to look at our ratio. And let's say we invested in the 1998 bottom here. We were working up, and look at these big moves. This was not an easy ride, and you would have a lot of people probably got bucked off this bull market right here, but you wanted to hang on here. The valuation still wasn't overvalued. The housing prices were still going up. The housing starts were still going up. It would have been a huge mistake to sell out here, and that's why you need to look at market conditions in your housing starts. You wanted to ride it all the way up to this overvalued area. This is not an easy ride here. The power to hold, and that video will tell you how to ride through this and what to look at. But this is your valuation. This is where we wanted to sell, is when it became overvalued here, just like history. And I overlaid these guys on some price charts. This is an oil price chart. And look at this is the oil to gold ratio. Sorry, this is the oil to gold ratio. And you can see how this lines up perfectly with this chart. These are the green and red arrows, or circles, green and red circles. And we are at a very prime time to be buying commodities. This is oil. Oil is very cheap in relationship to history. It's not been this cheap ever. This is it overlaid on the housing starts. And now if you notice this valuation, this is the commodity to S&P 500 ratio, you could see this large drop here in 06, 07. If you look at the housing starts, we didn't really have a drop out of, there was no drop out of, there was nothing telling us to say that we should be selling our commodity investments. It was still continuing to go up, and there was no trend line break. Now this trend line break was quite obvious here, and this is where you'd want to sell, and this is right in the area coming down here, so that we would be selling right in here after this peak. So it all aligns, and we want to use this market conditions as a sign to buy and sell these new housing starts. So here's the housing cycle. We want to be investing commodities during this expansion phase. And I just wanted to show you that this is the expansion phase, and when we are coming up into an expansion phase, this was an expansion phase, this was an expansion phase. So our exit strategy relies on commodity to S&P 500 ratio, the housing starts, and that will signal the hypersupply phase of real estate, which is deflationary. So we need to line all these things up to see the value, the market conditions, and then that means we have to exit when these things start and look toppy and start heading down. So we want to line all those things up. If we're out of alignment with the valuation, but we still have good market conditions with our housing starts, we're still okay to hold on. But if the housing starts to break its trend line and we really start tanking, we got to get out of the investment, even if the valuation may not be fully valued on our commodity to S&P 500 ratio. So that's our exit strategy. Hopefully you guys like this series. Give me a thumbs up, subscribe to the channel. I release updates on ratio investing, which is values. Values and the direction of those ratios also tell us market conditions and how they're changing. I go over market condition updates. I do all this stuff for you. This is the channel for you if you're an investor. It's easy just to click the subscribe button. And thank you for listening. This is Finding Value.